Boom. We are live, ladies and gentlemen. Thank you for joining us today. It's been a little bit. Good to be back with everybody. For this Monday afternoon breakdown, we're going to be going over a bunch of different ideas. But our core thesis today is long term about optimism and I guess the adaptability and ingenious of human creativity throughout long periods of time. We're a pretty interesting species. We've accomplished a lot over our lifespan on this planet. So to kind of focus on that, technology takes a front and center. We've been all interested in Bitcoin. We're interested in any technology that can help communicate kind of permissionless, trusted network between parties around the globe that don't need a government or a state sponsor to give them the value that we would want out of that type of mechanism. So this is actually not that long of a time frame we have on the left-hand side of the screen. 2013. It goes back a little bit further here. There's 2012. Don't have all the data on this particular chart, but I did want to point out just a few things in the past. One of the reasons why we like the bear is an emblem of accumulation and foraging. And here, each one of these circles represents a time when the RSI was as low as it is, which is below 30 here effectively, is kind of one of the peak out ranges. And I think what's important is to remember that when the fear is highest and these RSIs are peaking the most, this is generally the best time to accumulate. Now, could we go a bit lower? Yes, there's always reason to believe we could go lower. This is often largely based off human sentiment and fear about things happening in the market. The reason I wanted to start with the optimism of venture capital and kind of the human species capability throughout time is because we've solved so many unique problems in the past. I kind of expect that from the future. Now, we've made a lot of bumbling mistakes with our history repeating itself. We're not super great at recognizing the pioneers as the times change, but nonetheless, the times continue to change. And because of that, this thesis around what sovereign money, sovereign identity, and sovereign governance and sovereign ownership of almost anything is hyper important. So we, over the last, what is this, pretty much decade we have in our time frame, every time the RSI gets this low, traditionally speaking, you're in the greatest area to accumulate. This is basically the best place to be buying. This whole market cycle, we've been looking at what I believe to be is a re-accumulation cycle, a very powerful one. I could make some arguments for the rest of the market being in some pretty heavy, tumultuous times ahead. Bitcoin, though, it can't come too much lower based off who the holders are and their ability to think long term. Even in extraordinarily heightened moments of peak fear, like in March 2020, it was turned around with so much money printing. You know, as states or corporations or governments go through this kind of debt spiral, a lot of the same things continue to happen. So I don't suspect that they get out of this in any way other than printing. Now, could they tighten? Could they tighten the markets up more? And this is where, looking at the general economy, what I think is interesting is Bitcoin itself, I believe, is primed for a multi-year bull market. I'm going to make this thesis again. I do not think it's game over for Bitcoin. I actually think that as crisis starts to ensue, the real value proposition of a non-state backed property is again a hyper valuable way. It's very undervalued for whatever we think it's at today, because state-backed tyranny is a system that keeps seeming to rear its ugly face, and there are technological solutions to at least the monetary system and some of the corrupted conversations in terms of the information highway that have taken place throughout that I guess economic information as well. So because of that, I think Bitcoin is actually really quite primed to do something beautiful here. Now, could we slip down significantly lower? Yes. But at the same time, I don't think it would be easy for you to purchase it. And I'm going to make an argument about what this might look like depending on where you are and what time it is. So where's our other chart here? Okay, so first off, we had a bunch of ideas we wanted to go over in investing styles. We've gone over this one before, but traditionally speaking, throughout the world, investing in strong companies, it kind of withstands the test of time, regardless of what's happening. Now, the currency that might be backing each of the growths of those companies is drastically different. Like there are companies that have outlasted the growth and diminishment of the currency that is apparently there that they're using to do their trade value from. So we have to remember that what we're betting on here right now is a large financial crisis that's been basically built up for the last 100 years. And as it starts to pop, things are going to get a little weird. So we're not going to look at investing styles today. What we're going to do is go Sri Lanka rupee to USD. Now, this again is a story I think that's important because it always struck me. Here's like the break of a peg, effectively. So if you can see on the screen here, yes, okay, this is the Sri Lankan rupee, the United States dollar, and it was puttering along here pretty well. It was a 500th of a penny, or sorry, yeah, I think that's right. I'm not sure, and here, boom, massive drop down to pretty much half that. But this is only what the chart says. When I was chatting with my good friend who was in Sri Lanka, who left rather recently, the street price was actually even lower. So you were paying effectively 100% more than what the chart says here to get US dollars effectively. And for Bitcoin or crypto, you could fetch an even higher premium because of the utility of that asset in crisis. So you were fetching a premium of 20 to 30% over top of what was also 100% over what had just been a loss of basically 50% to your purchasing power in the traditional Sri Lankan rupee, which is a local state property, effectively. So this is a hard story to realize. And depending on the situation that you're in, the value of that Bitcoin appearance is totally different, right? So if we were to chart Bitcoin to the rupee, now, we could get into long conversations here, but there's other interesting things that have happened here along the way too. So this is just going to be kind of a roundabout story here around currencies. Is the Russian ruble to USD? So this is an interesting part because who here remembers the day that the Russian ruble collapsed and everyone was like, oh, look at the Russian ruble, they're destroying their currency, and it dropped from 0.013 here to 0.072, so it lost 50% of its value. But you know what they did? Then this is a fascinating part of the conversation. It's often overlooked. Is I think they went to a gold-backed currency, and now the ruble is stronger than ever. In fact, it is at Yeah, it's back to, sorry, it's a bit of a time frame gap here. There we go. It's still really low. Let's just remember that all currency over time seems to have this like downward trend. But nonetheless, it's low, but it's jumped out back to new highs within the last 2 or 3 years. So the currency game is a really interesting conversation, but throughout this as well, what's the value of the Russian ruble outside of Russia? Well, I'm not sure. Maybe you can't spend it. Actually, in fact, you can't spend it most places. You can't bring it to Costa Rica. You can't spend it here. You might not even be able to use those banks now. I'm not entirely sure. So as currency and crisis wars start to take place around the world, depending on where you live, you're going to have a drastically different relationship with what I think the importance of something like Bitcoin is, and why I think that these long cycles and these accumulation demands that I think are taking place right now are bullish, even though we're facing down a lot of historically crisis moments. Like here, for instance, this is the grain and commodity chart, and you'd say, and I would make the argument again, when food becomes overpriced and the average person cannot afford to buy food anymore, you start to step into very dangerous territory. And you might ask yourself the question, well, what good is any asset if all of a sudden the state is under basically siege or you run out of gas effectively? Now, depending on where you are, you're going to have localized differences. Like it's highly unlikely that Saudi Arabia is going to run out of oil, no matter what happens with how many US dollars they have. So Russia is actually largely the same. They have a bunch of oil that they can take care of themselves. And by putting pressure on these economic systems, what we end up doing is kind of disturbing the lower portions of society. And this is where the crisis conversation starts to come in and I think becomes the most important, is because under the duress, when the social contract starts to break down, when you have food costs getting really high, there are certain assets that perform very, very well. But in the midst of those things happening, it's not really until you get to the street level that is the most apparent, again, where you see that having the Sri Lankan rupee versus a US dollar versus a crypto asset at that time, you were getting 30% over black market prices, which were 100% over the 50% drop that had taken place on the foreign currency exchange itself. That what it's showing here in the chart is not at all what was available. Like, you're getting half that. If so, this is a really important conversation. And again, when we're privileged and we live in a community that's not currently going through that crisis, the stability of our money, it seems to be a no-brainer. It's a given that the U.S. dollar's price is going to remain this one of one type thing. And this has been a fault that has been made throughout history. So how do you objectively prepare for what the future looks like? And what I love about the internet and technology is that it can actually help us solve some of the problems, and then it gathers some of the world's greatest minds and interests around these conversations. So every time we see one of these dots, and there's a few ways we've looked at this is basically an area to accumulate. The bear indicator that we were working on, it's not up there right now, says basically the same thing, that we're in a perfect area to accumulate. And these are Michael Saylor had a great interview today. He's like, I will forever be the buyer of the top. And that's actually probably the smartest thing I've heard come out from a long-term investor sentiment, is like, you should be interested in buying the asset everywhere along the price of its growth and generating revenue and wealth through something that's productive. That's always a great way to go. Like, your portfolio is really not your revenue generator, although it can do that. You should focus on things you're passionate about in business. So this kind of long frame story about how business and how technology will grow in the face of war, inflation, pretty much everything is an important one, because it's based off human ingenuity and creativity that is birthed most often through necessity. And necessity is not always a comfortable place to be. So I think that the story that we're going to get over the next few years here is really a relevance of function and form throughout that time, and that's where it'll become very apparent. Like, the price movements to get into hundreds of thousands of dollars of Bitcoin is going to be a pretty dramatic series of events, because it. Now again, the plus side here is I believe that this solves a lot of trust issues in the long term too. So there's people who are way smarter than me that agree very, very cordially with this type of idea. So what was the point of all this? Oh yeah, okay. Be accumulating. This is probably the best time. Markers across the board are signaling accumulate. We've got high levels of fear for extended periods of time, which is almost always a great sign of accumulation. You have to also remind yourself that the best time to be buying more is when it seems almost like sociopathic, like, oh, but there's war and famine and disease. And it's like, yeah, that's actually the best time to be investing. You got to remember that the hat of the investor looks for crisis and chaos as the opportunity for irrationality in price behavior. So every time we see extended moments of fear, it's usually good. Now, don't underestimate how long we can stay fearful too. Like, we could go a lot lower in some of the other sectors, and this is one of the things we had looked at. Let's go back to the S&P 500 here. Okay, so here's the S&P 500 on a much larger time frame. I think it's where Bitcoin is now. I think Bitcoin breaks out of this. It basically goes onwards and upwards for a few years afterwards. It'll be drastically different. I've said this a bunch of times. I think that the next bull market cycle is basically an extension of this three peaks and domed house that we've seen in a bunch of other assets prior to Bitcoin. So we see this type of market behavior and sentiment, even under duress, take place. And this is, this is decades of duress here that you see on the S&P 500. But nonetheless, what I wanted to do was go back here and take a look at why there's more downside in some of these other markets. Now, we've probably had what will amount to a dead cat bounce. Looks like a pretty strong distributional top right here. A big part of the question, we could easily get tossed back down here to the 315 point range, but there's a lot more room for downside in the S&P 500 than there is in Bitcoin, in my opinion. I don't think there's a lot more room for it to go down. It's in very limited supply, whereas some things like the S&P 500, you have a much different market base of locked up assets and the fear that might take place as those things start to diminish, especially quite quickly. We've seen, just as an example, with Netflix here, had you been a buyer of Netflix for pretty much any time since 2018, you are below your entry point. So you could have had a great long-term investment strategy into Netflix. You started in 2018, right? And you're thinking you're boss here, and you're right now currently basically have all your positions down 40%. So this is actually very, very dramatic because this is not a short time frame of entrance into the market for them to be totally down. And here again, so when does the distribution turn into reaccumulation, and what kind of market pressures are going to push that into effect? And these traditional market sectors actually have probably a further way down to go. I would suspect that if we were to go into moments of crisis, then something like Bitcoin. I think Bitcoin again will really start to shine when some of these other things start to break down significantly. We've already had multiple like 10x 80% reduction, 10x or 80% loss again, 10x 80% loss. So as Bitcoin's gone through multiple up and down cycles, the S&P 500 has basically just only gone up. It hasn't experienced this downward 80%. In fact, the largest downward percentiles we've seen is around 20% for the S&P 500. In all of that time that Bitcoin has gone up and down dramatically, the S&P 500, a lot of these common index players have only gone down a little bit the entire time. So I think because of that, most of the liquidity, most of the market supply is already chewed up, already being moved into strong hands, and intelligent players that recognize, like us, they're going to keep printing. They've done that for every time it passed. So even if they tighten for a little while, what they're not left with any other options other than starving the market, destroying pretty much everything, and creating one of the greatest civil unrests humanity has ever seen, which is a possibility at this point that I wouldn't necessarily bet against either, which is why we do cautiously look like, go, well, guys, the grain price is really high. We see, what is this? This is the agricultural index. That doesn't look great for the cost of agriculture. Just as a broad spectrum for the mid of May 2020, we're up 100%. That's 100% of costs. This is all going to go and end up back on the consumer's table and plate from farm to table inflation costs right there, ladies and gentlemen. So this is hitting Main Street now and in the coming year or two. So there's some pretty worrying things. But again, when push comes to shove, the way the market will react versus what you see, I think, again, the same way the Sri Lankan rupee, it says it's at 0.28, but you ain't getting that. Like, not if you're actually in Sri Lanka, you're getting way less than that for the US dollar. So it's the same. It's an even less for crypto, like a USDC is even technically worth more than the US dollar. Who would have thought? Technically, USDT is worth even more than the US dollar in times of crisis. And these are attributes, again, that are largely associated to this kind of new function of technology, what it's capable of, even just at a broad spectrum. Hey, this kind of works, right? Anyways, I think it's a really important part of the conversation to understand. I think it's probably the most valuable aspect of Bitcoin long term. Now, I'm a huge fan of open market capitalism and building new technology that solves current demand and crisis problems. I think it's one of the most fun parts about human nature. It's why we like venture capital so much. Well, that and venture capital can make a shit ton of money with very little effort other than sitting patiently. And that's what I wanted to go over for this next part was, aside from all the crazy stuff that's going along in the world today, specifically focused on like grain, agriculture, or rice, like commodity prices in general. Also, that would be, Bitcoin is technically deemed as a commodity, and commodities have been doing really well lately. Much better than traditional equities, actually. Commodities are all up 100%, basically. They're just only going up here at this point. This was Brent oil. Again, we're up significantly for oil, at least over the last few years. So this will all be passed on the consumer. This will just usually equal more crisis on kind of Main Street. So we're definitely worried about that. But when those crises hits Main Street, what asset would you want to actually have? Oh, well, here are the assets. If you compare to all these other places in the world right now that may be going through similar issues, these are the assets that are most valuable, and here's why. Okay, so what was there was another point I wanted to get. Oh yes, here, venture capital on the long term. Not the three peaks. Okay, I didn't go over this last time, but I wanted to go over it this time. I was doing a little bit of digging around here the last little while, and this is the Monster Beverage chart. So this is pretty spectacular. This is from 1995 on the far left-hand side of the screen to 2015. So the x-axis on the y-axis here, 140,000% returns, also known as 1300 and 1300x. So for every $1,000 you put in, you're walking away with $1 million basically. So if through the years 1995, 96, 97, 98, you invested $1,000 a year, you're walking away with an extra $20 million basically from like a $20,000 investment. So these are the kind of returns we all want. This was, I think, the best performing stock on NASDAQ. They probably went public quite early, which was a unique feature. It gave this really long accumulation and also the potential for such huge amounts of growth, which is normally what we would correlate to why we like venture capital, is because where else are you going to get these astonishingly high growth periods? So one of the other things we thought was interesting was here are a bunch of other investments. This goes over our 100 Bagger and Dandow kind of book thesis that we thought was fun. So this is also from the 100 Bagger investments thesis. This is some of the data from the book just highlighted in picture format here. Berkshire Hathaway, 18,000x. What in the is that? That is awesome. Now, guys, again, we love Bitcoin. The X's are much higher than this. Early venture capital is much higher than this. But I just wanted to give some like context and also frequency of this stuff happening. So look how many over 10,000x growth companies there were here. Actually, quite a few. So there are many out there, which is great. I also wanted to go over this coffee can approach. For those of you that have not read 100 Beggars, I thought this was fun, just as a kind of short answer thesis. It says, finding these winning stocks or any investment that you think is part of the process. 100 Beggars take time to grow, and investors can be certain to run into market crashes, downturns, and other volatile periods before then. However, if you do invest without being scared of the position until then by using the coffee can portfolio method, this is the simple idea of finding the best stocks and letting them sit for at least 10 years. And again, every time you hear stocks, just think of like any type of good investment effectively. You can do this with almost anything, but companies are able to grow much faster than, let's say, a property value. So by using this investing strategy, you'll find in your portfolio some losing positions, which could be worth a fraction, but also the potential for an outsized position, which will become your 100 Bagger. And I've gone over this often that effectively what you're looking for is like one really good investment. Now, what's nice about Bitcoin is we believe that you can keep just investing in Bitcoin, and it's going to be a very strong asset for years to come. Now, I'm a huge fan of venture capital because I want to know what's coming next. And there's been a bunch of stuff we've been right about, and we've actually, aside from, again, the money potential, it's a lot of fun to find the next thing. So this is why we've been focused largely on video games, which one of these out of the 20 that we know are probably going to fail are the 2 or 3 that are going to be very successful. And then just you keep increasing position size as time goes on. So you kind of make a bunch of bets. You keep paying attention to the theme and thesis. You kind of usually boil down to a few, like say 5 or 6 that look like they're going to be winners, and then it ends up being like 2, effectively, that still beat out all of the rest, out of the 20 effective investments that you could have made. So this is what everyone wants, right? Like everyone shows up to Bitcoin because they're like, I want to make $1 million for every $1,000 I invest. Like that's just such a great thesis, right? Like everybody here is like, hey, how do I get 1,000x? What type of strategy and how big a numbers can you invest here? It's like you can actually invest significant amounts. Like you could have invested very large amounts. Like this is not just small number strategy. You can do this with bigger numbers. You just, again, you have to recognize that it takes time, which is why one of the things I'm so stoked about is Michael Saylor's strategy. He's just like, yeah, I'm going to buy the top too, motherfucker. I'm going to buy out the bottom. I'm going to buy all of it. And that's actually a great strategy. If you look back in time, when you've got a winner and you've got a monster winner, you just want to keep accumulating that monster winner, basically, as much as you possibly can, as early as you possibly could have. So as early as you possibly could have is usually today. So going against all FOMO decisions, you can see there's clear reasons on the technical charts to be accumulating. There's clear reasons on the fundamentals, which is why does an asset like Bitcoin do so well. And then again, on the broader spectrum, with the venture capital, with things like Web3 video games, you have proliferation of video games that's already making hundreds of billions of dollars effectively year on year. So growth is it already exists there. The technology is going to find a perfect way to communicate community ownership over time, and it will expand so fast. I'm incredibly excited about what the video game sector is going to do for crypto, because I think it fast tracks us to some of the most exciting parts of the development here, where we get iterations through governance and identity that we just really never seen up to date. So I think we're in a really exciting time. So even just a beverage company here at 1300x, so many times these 1000x, but you're talking about 5 to 10 years of good investing, finding your theme and investing within that theme. So again, just kind of this go over some of this idea is it's okay to have losing positions. In fact, we know we're going to have losing positions. It's always part of the case. So you prepare for that with mantras like heads I win, tails I only lose a little. And this way, you get 90% of your companies that end up basically worth nothing, and then one of them that outgrows either by 10x, which is pretty standard. So you'll be able to make your capital back with the 10x, which is standard. So you're like, okay, well, I only lost, I'm like, I lost $1,000, you could say, and basically fees and time, and here where you're or the majority of the time when you get 100 bagger, your return is outsized in comparison to the whole portfolio investment, which is kind of one of the fun aspects. So if you haven't read 100 Baggers, I highly suggest checking out this book. There is another one here, is how many years it takes. It's usually around 4 to 10 years too of patience throughout that time to get like 100x. So that's what everyone's looking for. How do you make the most amount of money with the least amount of effort and the least amount of money if necessary? So here, there's a few others. I just wanted to quickly go over years to 100x was 17 years, and the lower end was here 7 years. So yeah, basically you just keep investing for around 3 to 5 years, and when you have winners, you're talking for every $1,000 you get in, you're walking away with anywhere between $100,000 to $1 million per $1,000 invested. You just got to have that open time frame. You got to understand the logistics of the game, and you got to try not to get caught up too much in the volatility sentiment, and take approaches that are much more similar to what Michael Saylor is. In the beginning of bull markets, like where we are now, Jesus, you can just keep accumulating. Like there's no reason to not be buying more. Like even if Bitcoin drops down a little bit, it's going to be probably so short-lived. And I think it might just be a number on the screen. I think if Bitcoin appears to drop very low, like you're going to might maybe see street prices for Bitcoin at like 30 to 50 percentile higher than whatever the cost of that currency is going at in these crisis-ridden areas. So I think that's important. Okay. Let's take a look at the thought. That was kind of just the general sentiment for today. Yes. So I'm bullish. I'm not. I don't think that the Bitcoin bull market is over. Even if we see a little bit of a gap down, again, there's room for 24 to 20 something thousand for this three peaks and domed house thesis. Again, in the bear den, some of you guys were looking at the smaller, like, there's a distributional pattern here, there's a accumulation pattern here, there's a distribution pattern here, accumulation pattern here. This is totally valid. We've gone over some of this stuff in previous Bitcoin market trends. Let's see if I have it open here. I do not at the moment. Okay. Well, nonetheless, there's not a whole lot of more room for downside. I wouldn't suspect. So I'm quite happy. We're very stoked. A lot of the venture stuff is valued way lower too, so that's very healthy. In my opinion, it's always nice to see proper valuations come through the market side, and they're really well funded. Like, A16Z just raised like $4 billion for their new crypto fund. So this sector's got capital to run through like a bear market. They're not they're not poorly capitalized. So you have some of the most interesting, intelligent people working specifically in this sector, and they're well funded now, right at the kind of the top of the market. So when you would want companies to be cash flush, they are right now, generally speaking. And unlike 2017, they raised mostly in USDC or USDT instead of Ethereum, which means they probably still have most of the capital instead of also losing like 40 or 50% of it in a short period of time, which is, it sent a lot of great ideas probably right down the toilet back then. But yeah, look at that, over 31,000. This is great. It's great to see. Yeah, back to, again, our larger thesis here. This is like the perfect time to be accumulating. Like, yeah, we're in like a gravy zone for price effectively. So I would keep that in mind. It doesn't get much better than that for when you would want to be buying, at least from what I've seen. Again, could dip a little bit lower, but you're basically dealing with a non-important thought over the long-term time frame here. At least in my experience, I've been here for long enough now. Just know, okay, look, anytime you see these indicators, especially like this, fear stack, so many things going wrong, crisis on the verge, like this is pretty much as good as it gets for Bitcoin. But in terms of the rest of the market, oh my God, I have no idea. We could see some pretty crazy stuff still in terms of downtrend. I don't think Bitcoin's got that much further down. It could even go. It's a very, very important asset as the future goes forward. So yeah, I'm basically still very bullish. Yeah, I think this is a very strong turnaround period. Let's go back into linear. Yeah, let's focus here like this. And let's get real. And let's go with the money strength here for a second too. Okay. So, what I wanted to point out here too, I thought was interesting, especially for the Wyckofians out there. Look at the amount of supply that came in here, and look at that. We, considering what it took to get us down here, this was a very nice absorption. And look at this supply string down here. This is all the way down here. This was what we would look for in that first kind of initial phasing. So I think we saw what is it, either a spring or our kind of secondary test. Again, I stand by the idea that this is a long-term reaccumulation pattern. Again, I think many big players recognize the value and the potential here. So actually, and here we are. There we go. There's the more current chart. BLX was not functioning there. It's down to 29,000. Here we go. Tether on Binance at 31,250. Yeah, nice. So I suspect we're going to see more accumulation here. I don't think we've got a whole lot more for sell pressure that came in. We see the long positions right now are huge, and there's no real other better asset out there. Like, would you want to buy Monster? I wouldn't. Look. First off, Monster. Basically, Monster has also never really had a bear market. It performed beautifully. It pretty much only went up. It's gone up much less since then. But there's a whole lot of room for downside in some of this stuff in terms of what's actually valuable. But Bitcoin, on the other hand, I don't think there's a whole lot of room left there. So I think we're at a pretty nominal bottom. The kind of three peaks in a domed house thesis says that this was basically the bottom. That we would come back down as low as 0.10 here at around 29,000. And we did that. We've come a little bit lower in the S&P 500. Again, we dipped around 12% lower than the previous 0.10 here for the three peaks in a domed house. So I think this was the bottom. I know a lot of people are going to disagree. There's a big conversation around what the Fed is going to be doing. But I think that this doesn't, I think this is going to be a time unlike any other where we start to see a real separation. And I think we're seeing glimpses of it now. The S&P 500 jumped within the first few days, and then Bitcoin is a bit slower. I think that the accumulation that's going on with Bitcoin it doesn't need to be super huge to be monumental in terms of like who the next big holders are compared to where we were in 2017. There's a drastically different interest and monetary capability here than there was in 17. So I think that's going to bode very well for this whole sector, especially knowing that most of the VC companies within the crypto space, like Web3, who basically all funnel back into Bitcoin eventually. Like all roads lead to Bitcoin, in my opinion. That's kind of the central monetary source. And it makes a great argument for tokens actually being products, which is, I think, another fun part of how this conversation will evolve through time. But I think this was the bottom. There's so much. Yeah, there's a bunch of other indicators here. Where do we else want to go over? Oh yeah, um, just some quick data from as well. The risk reserve ratio right now, we're also back down below, which is great. We talked about the around 42,000. Like, guys, we're basically in the middle of a market accumulation cycle. The risk to reward is basically even. We've got as much room for upside as downside in the immediate future. So the only good thing to do is basically be consistent and accumulate. But here, pretty much anytime we see drawdown below point, what is this, 002? This is another great area to accumulate Bitcoin previously. And again, I'm using this kind of as a market center because I believe that this is our bizarre marketplace is Bitcoin still. Ethereum helps facilitate a lot of that, and a lot of the layer ones will start to, I think, gain steam there too. But this is the Mayer multiple. Another great time anytime we see Bitcoin all the way back down here below our Mayer multiple of point, what is this, 0.8. Another great place to accumulate. Again, if we just look at 2017 here, again, even though when we were at 6,000, yes, we came back down, and this is what's important to know, is like from 6,000 to $3,000 feels like a big gap, but it was only 3 months later before Bitcoin was back above $13,000. So timing the market is basically just an annoyance. If you really want to do well, one of the best things to do is find that you're in an accumulation market of any kind and just start accumulating. This is yeah. So here we are again. We're actually quite a bit lower than the previous oscillator too, up at the top here. So I bet you this is as prime time as it gets for Bitcoin's price. Could we see a slip? Could something dramatic happen? Yes, we could get hit by an asteroid, and I bet Bitcoin's price would come down to like 12 grand for a minute, but it wouldn't last very long, and you'd be too busy worried about trying to buy supplies or some shit. Like you'd have a hard time buying more Bitcoin in that moment that it came that low. So I think we're in a great area. We'll take a few Bear family questions. We'll just look. Oh, this was another fun one. I thought that Glassnode shares. Let's get my face out of this chart here. Okay, so, and this one actually looks better, much better with a bar instead of a line graph. Okay, so this is the percent of last active Bitcoin wallets. So this is Bitcoin in a wallet that has not moved over a year. And notice how it's been increasing dramatically since we started to kind of bottom out there. And every other time we started to go up again, it represented the bottom effectively. So as we started to cross over here, but around the $6,000 mark, as we peaked up the first time, flattened out, that's when big price moves started. So here, as we go up, we peak and we start to flatten out. It's likely that there's going to be some type of price correlation here to begin with. So I think a lot of people are going to think that it's a dead cat bounce as well. Michael Burry, a very smart man, was a few years early with his first call from the Big Short. I think he might be a few years early now. I just don't see how they get out of this without printing. If they stop printing, like, I can't imagine the global calamity that will come to pass just through to lack of I guess, velocity of capital. It would be so horrible. I don't know if they can let that happen. I'm not. Maybe. I don't see any other option. So I think they try to push it out for a year or two, and I think then it does. I think it gets dramatically bad at one point. Where that is in the future, I'm not particularly sure. So the game over title was more of just a joke. Everyone gets scared at the wrong time. When you're scared like that, when the markets are scared, when there's peak moments of fear like this, even if there's still room for extra downside, like it'd be very hard to accumulate, very short lived. Just like again back here in March of 2020, that drop from basically 9,000 down to 4,000, and the return to 9,000 was like 35 days or something, 45 days. And this was, again, largely off the back of printing a ridiculous amount of money. But I think that we're in for a new cycle for Bitcoin. I've talked about this a bunch of times. Not a super cycle. It'll be slow. It's not going to be anywhere near as exciting as the 2017 bull market. It's just going to be kind of this likely day after day kind of slow grinding growth upwards. I think we'll hit a new cycle for the way it gets accumulated. And this is largely due to big interest. So the supply also is one of our other favorite areas to look at. How much supply on the open market is getting chewed up right now. This massive chunk that came in in around May 11th. There was the Luna LFG guard dumping all the Bitcoin and it getting chewed up real quickly. And again, you see the nice price drop correlated with that here on the right hand side. And again, we're now price going upwards and still accumulating. So I think we've gotten rid of a lot of the weaker hand players within that first big drop. I think that wiped out a lot of leverage. There are a few others we could have gone over, but I just wanted to do a quick little update today. This doesn't feel like an old school bear market. No, I think it'll be shorter lived. That's my current sentiment. I think this is I think it's a shorter bull market or a shorter bear market than our previous ones. I could be wrong here. We could enter into a multi-year recession, like basically catastrophe. We could enter. Like I want to highlight this one more time here because I don't think it should be brushed under. We could enter what is effectively like a catastrophe. When we see, and just to be clear here, like it would be a catastrophe for pretty much everybody. So this is the wheat cost. I wish I had more data for wheat. Let's look here. I think I got more data for grains. Yeah, here we go. So here's back at least to 2015. Yeah, that's not really enough. It'd be nicer to have data all the way back to like the 1960s or something here for, but I don't think they're going to show it in the Dow Jones Commodity Index. I'd probably have to look up companies or something. Anyways, so here we're limited on data, but at least from 2015 to today, the commodity prices of grains are up 105%. Like this is horrendous. Like, look, obviously people like me, I don't care. I seldomly look at what a receipt says. So because of that, this usually, like most of the times when we see revolution take place, like if you look back at the Bolshevik Revolution or what was happening, even in Uganda with Idi Amin, like he was almost like a byproduct of a bunch of other things that were kind of taking place. And I'm not a historian, I'm not super well educated per se, but in parts of these collapses and the kind of dictatorial takeover and the collapse of society, the rich people are usually singled out first. Exactly what we're seeing in Sri Lanka. Some of them probably, again, deserve it. We've gone over this before. Some of them probably not. They just were smart enough to build a good business and save and accumulate and make good investments, which we would all hope people would be doing. But again, there's a lot of corruption that ends up, and people just assume that most of the times if you're successful, you had to do something corrupt to get there. So these large core imbalances in grain costs affects the lowest income people around the planet. And they do a lot of the work that most of the higher income people don't do on a daily basis so that their lives are more convenient effectively. So as this disruption starts to take place, like this could get catastrophic if banks don't print and they lock up liquidity on Main Street. It would get catastrophic for Main Street, right? So you start to see a weird dichotomy about, okay, what power does the Federal Reserve have over the next few years, or any central bank, based off the idea that like commodity prices are jacked, energy prices are again back to the top, wheat, oil, grain, corn, all jacked up effectively. Yeah, here's this is back to nickel. Where's corn? Oh yeah, here's agriculture capped. So grains. Yeah, so all of these are basically up 100%. Agriculture, grains, oil. That's so that could equal catastrophe. And so we're assuming that they come into print at some case or another, because I don't see how much other choice that they actually have, and that's what's happened in the past. Either that, you see just a general collapse of society too, which is equally on the chopping block. So I'm very bullish on Bitcoin for multiple crisis-based reasons. There's going to be a point where the price on the screen will be totally irrelevant to what the price like on the street is, especially depending on where you live. So I would keep that in mind. I think that's important. After all the things I've been through, I think that is a highly important part of this sentiment. And then, I don't actually believe we get a dead cat bounce. I think Michael Burry underestimates the feeble-mindedness and then the printing that will take place. Or we're all headed towards a catastrophe, which will be like unlike any other. And I hope that that's not the case. So we invest in characters in the NFT and gaming space in hopes that that's really what takes over the future. As it acts as an on-ramp to a non-state-backed financial ecosystem where we don't need the stupid governments getting in the way of people working together effectively to solve their day-to-day problems. So hopefully, necessity breeds the mother of all inventions, which I believe it has, and I believe we're kind of witnessing some of that now. So give us a thumbs up if you like this content. I just wanted to give you guys a quick update. Again, ultimately, anytime you see strong signals like these are buy signals. You got to remember to put on kind of a different form of thinking when it comes to investing. If you see people scared, if you see things going wrong, it's a great time to be investing. What you're investing in when that is happening, though, is of ultimate importance, obviously. So this is why we focus on Bitcoin and still have for years focused on Bitcoin. We like venture capital because we think it brings in the future of why adoption takes place and what continues to make Bitcoin even more valuable is kind of center of the thesis here. But, there's a lot of potential for upside in Bitcoin, but there's a lot of room for downside in things like the S&P 500. And there's a lot of room for downsides in things like chaos and catastrophe in the world, whether they're manufactured or by acts of nature. Those things can leave large dents in irrationality. And every time that the human species has largely been irrational, it's been a great time to try to scoop up cheap assets. So something to keep in mind. Subscribe to the channel down below there if you haven't done that yet. We'll take a look at, we got 243 viewers. Nice. Good to see. I hope everyone's enjoying their day and really trying to take a long frame outlook. Lots of reasons to accumulate here. Oh, and let's see here. We'll take a look at a few. Hold on, we gotta be moderating the chat here. There's we just found a bot. Hide user on this channel. There you go. Okay. Let's take a few of your guys' thoughts and questions here. Bear market equals great discounts. That's the true. So you're saying we should set our dream buy orders? Yeah, totally. That's always a good idea. Fat finger buy orders is always something good to set up. Jacob says, if food prices get too high or fiat is too worthless, bullets become better investment than Bitcoin. The powers that will print, prop up, regulate. I've lived in some pretty rural indigenous communities, and although they can be violent when they want to be, that's largely not where their success comes from. Their success comes from like collaborative mentality. So most of the times, if you were to go to let's say a communal state where people were farming again, most of those people learn how to collaborate instead of kill. Now, I've been reading a great book about the feudal kind of revolution of kings and knights and people who can arm themselves and protect themselves versus these different kind of like, oncoming tribes effectively. And war is obviously a part of the human past. So it will likely continue to be a part of the human future. But the ability to afford weaponry at such a scale is really a monetary thing. So you can arm yourself better than most governments, depending on who you are and where you live and which government you live in. Like if you could go down to Venezuela, I'm sure, and with enough money, you'd have a better military than Venezuela. I mean, okay. Anyways, okay. Can this be a dead cat bounce? For a bunch of the other sector, I think, yeah. Again, I'm bullish on Bitcoin. Maybe it's the wrong thing to do. Again, we could still come down. Let's say we could come down to $12,000. There's any number of things that could turn into a cataclysm that can scare the crap out of people. So, I wouldn't try to pick the bottom specifically. Just again, look at more consistent versions of why strategy works as an investment thesis. This idea of 5 different investing styles here that we had gone over in the past, and what that looks like over. Okay, well, here's someone who timed the market perfectly. Here's someone who just invested the moment that they had more money. Here's the person that did dollar cost averaging, and here's the person that had horrible timing that bought all the market highs, but then here's the person that just stayed in cash year over year. So it's clear to see that the difference between investing immediately and dollar cost averaging is basically, you should just invest the moment you have extra cash to spend, because cash is a goddamn liability. Unless you need it to spend to fucking day on some shit you need right now. It's basically a growing liability on a day over day basis. These governments are destroying its purchasing power, so it's a liability. So investing immediately is actually a little bit more effective than dollar cost averaging. Who would have thought? And this is kind of what we try to recommend, is that you should be focusing on what type of monthly revenue generation and a budget into these ideas can I create, and really really carve that out. I know it's not like, oh, you got to buy here and sell here. It's not as exciting. And there are moments when it's definitely in the early market of 2020, like, oh my God, yeah, we were screaming bull market, like fucking get every goddamn penny you can get into the market. Now it's like, oh, we're midway. You just kind of like keep it easy, focus on a strategy. And this kind of invest immediately versus the perfect timing, like all the tomfuckery of screwing around with the market and you getting it wrong and didn't get around when all you had to do was basically just buy the asset and do nothing else. You're gonna end up losing way more than had you just been able to like follow a simple strategy. So for most people, like 99% of people, or let's go 90% of people, it's just easier to invest following. You have extra capital this month, today, invest it. That's it. Move on. Don't think about the price of the asset. If you've got a good asset, it's going to absolutely destroy the inflationary rate. And Bitcoin is one of the few that's actually continued to do that. Even the S&P 500 did not outperform the inflation rate as well. So we're in a very interesting point. So yeah, what a chart. Yeah, this is kind of a fun one. I thought that this was a really interesting way to share, kind of just get in the market and invest as quickly as possible. Just make sure you're limiting your investment so that you can keep investing every month. And then you can basically rule every, yeah. And the rules generally don't change. So this has worked remarkably well. Consider dollar cost averaging a compromise. Again, this avoids market timing versus like, oh, I got money today, I should invest it, versus like the FOMO shit, right? Like, oh, I wait till the 16th of every month after payday and taxes or something, and then you invest your X amount of monthly liquidity into the market, which would be dollar cost averaging. So this does market timing work, and this is a great one. But like we've gone over this in previous videos. So again, I think it's very, very important to understand that over time the strategy pays off. And so in the middle of the market like this, even though I think we're at the bottom, like the best thing to do is just keep buying what you can afford to buy every month, and you're going to blow yourself away. You're going to be so excited. It's how extraordinary things happen from ordinary people. Anyways, Deal with the Arcane Mirror, thank you for joining us today. Oh, I'm going to make some more videos. I've been fucking around with Steppen, that Ponzi scheme where you spend ridiculous amounts of shoes and then you walk to earn. It's super stupid, but I've also learned in the past that doing stupid things early is actually incredibly smart. And often that kind of comes along with asking stupid questions like, hey, is the earth flat? Well, it's clearly not. Feel pretty confident about my assertion, but asking the question, is it a Ponzi scheme? Well, let's find out. It's one of the things I think that's so difficult about regulation is you should know that most things are going to fail. Just even if it's a good project with a strong team, chances are it's going to fail. Okay, so first off, we invest knowing that's probably going to fail. But we also invest knowing that there's some dumb shit we're going to miss that's going to be the next hype thing because we weren't creative enough to think about what might actually be there. So I've bought a pair of these Ponzi scheme shoes, 100% convinced I'm going to lose every dollar I put into the step and shoe game. And we're doing that with a bunch of kind of play to earn stuff right now. I think it's important. It's important to understand how risk works and how reward comes from taking that risk. The worst, we're going to lose some money. We're going to learn something along the way. So yeah, I'm playing around with the Steppen. So I'll make a video on that. There's a few other games I'm quite excited about. Phantom Galaxies, Nyan Heroes. There's a bunch of games we invested in this last year. Yeah, you can't see the board. Some of them are coming online now. So we've got a few more founder conversations that we're really excited about. And yeah, it's just a slow process. We're really excited about the Web3 gaming sector, really excited about the layer 1 conversation still too, like between Avalanche, Solana, Near, and Ethereum, clearly. Yes. Yeah, so if Charlie asks a fun question here, is like, if all the markets shit the bed, surely Bitcoin will react. No, that's true. Look, if we go into chaos, all the tickers are going to be running wild. That makes no sense. We've misvalued so many fucking things. The market has not attributed true value to what's out there today. It is totally skewed. If we were to try to find a new value center and function of money and credit, it's going to look ridiculous. The numbers won't make any sense. Yeah, you're going to have to be able to ignore that, and you probably would be pretty easy to to ignore it depending on where you are. But yeah, it could look much worse, but it depends on how you're trying to actually acquire what is it you need to do. Again, noticing that USDT is more valuable by like 30% in Sri Lanka. Well, that's pretty important, right? Well, why? Well, it's because it's more valuable than USD paper, apparently, and in time of crisis by like a chunk. 30% is not a small amount. So the functionality of a non-state-backed asset, even though USDT is technically state-backed, I would prefer over Bitcoin, but nonetheless, people like crypto, because it's kind of defeated the function of, hey, you can only travel with so much commodity of a thing. It's like, well, I can remember 24 words. You can't stop me from memorizing things. So good fucking luck. Travel with whatever you want. I think that was a really important cryptographic feature that was given to the people, and I don't think the true value of that has really been factored into this story yet. Especially when we see how many times the governments and banks have just turned around and taken people's money goddamn away, or when the social contract breaks, how worthless a lot of those other assets become, because you can't take them with you. You can't take that asset into a place that's not currently under crisis and actually do something with it. These you can. That's again hyper undervalued at the moment, I think. Okay, so that's it. Thank you guys. It's a lot of fun today. I appreciate you. Be ridiculous. Have fun. World's awesome. I'm very worried about some things, but trying to be as hyper optimistic about others. Yeah. So look for some exciting times ahead, regardless of what it is. I see a bunch of questions on the side here. We're going to try to do videos more frequently, pretty much once a day. I think at this 2 p.m. mark is pretty good. Maybe I'll try morning. We're not going to look at alts quite yet. I just wanted to talk about Bitcoin. Again, I think it's hyper important to understand our core thesis. In all of our newsletters, it's always Bitcoin as the guiding light. Everything else is an investment into like the secondary layers of what Bitcoin I think will bring to the market, now known as Web3. And that is, we've come so far from where we were with just Bitcoin to Web3 now. We've come so far. So I don't suspect that it's going to stop or slow down. And I in effect suspect that it's going to supercharge industries that are already massive to begin with. So I'll keep you guys updated on the step and Ponzi. I think it's fun. I like playing with these games. It's like I think I paid like $1,000 per shoe. We paid buy 3 shoes. I'm sure it's all garbage money, but that's the point. Being more playful. There was a time when we were looking at the Bored Apes and when they were super cheap too, and then we were less playful. Now I try to spend money on doing a bunch of things I think is a total scam. I'm like, this is a scam. I'm going to try it out anyways. You should be allowed to jump out of the goddamn plane, right? Let me figure it out. Hold on. I think I got this. This is actually probably not that hard to paraglide. I don't want to jump out of the plane paragliding by myself, but there's enough people out there that know how to do it. You can figure it out. Although, again, this is not investment advice. Do not jump out of planes, ladies and gentlemen, not unless you're highly trained. And same with investing. Unless you know, you've got a good thesis, you know what you're following. Don't just throw your money around randomly because you're going to lose it. You're going to lose it even making good investments often. So do your own research in any spectrum and have some fun out there. Do the dumb thing every now and then, knowing that you're going to lose the money. Knowing that you're going to lose the money 90% of the time on the good idea. Lose some money on the dumb idea every now and then. Yeah. Not financial advice, but just for shits and giggles. Anyways, Teal with the Arcane Bear. We'll see you guys again on the next episode.